This is Justin Pulitzer. This is my weekend review for December 14th, 2014. As usual, a lot of stuff to cover. Let's get to it. I had discussed that the market was in this bit of a grind mode up and that I thought it might be vulnerable to a retest of the breakout levels, and that is what is happening here. So I had been talking about, for the market to stay healthy in terms of correction, that it had to stop on a correction somewhere between 201.90 and this other potential left shoulder, which was 199.06. We're getting into those levels. On Friday, we had a absolute cascade of price, mostly at the very end of trade. I think a lot of people were trying to press short. A lot of people probably were afraid of having longs into the weekend. I think a lot of algos picked up at the end and just kind of pressured price a little bit too much into the end. So we did close a little bit short in the hole. I'm going to discuss that in a moment. But for some of the levels, I think we may be retesting early next week. If we do have a bounce, I do think we would retest this 201.90. If, like, on Monday we have some type of a rally up, we may retest that area. But if we do continue down, I'm looking at these areas as very significant. Obviously, the first and foremost would be the 50-day moving average, which comes into play at 200.22. That may rise as this, as the longer this goes on. That area to me is important. And then the next one down here would be 198.94, which is the 100-day moving average. If these are the two absolute, in my mind, must-hold levels for the market, somewhere in this region between the 50-day and the 100 MA, which will likely move up to this magical 199.06. If that happens to fail, if we get some type of cascade action like this, although you can see this took a long time to develop, there were plenty of short covering rallies. This may be one of those similar types of situations. Then we have to start talking about Fibonacci retracements. And as you can see, the 50% Fibonacci will coincide nicely with the 200-day moving average, which will probably wind up moving up by that time. But that comes in 195s. And then the 61.8 comes down into play around the 192s. I don't necessarily know if those are going to be in play this week, although this market moves pretty quickly, particularly on the downside. But I do think that this area will be good for what I talk about, those right or right out trades. I've been using the hashtag ROAR, R-O. And then if these levels broke, then we'd have to be talking about the hashtag GTFO. Get the F out. So that to me is a very important level. You can see on this volume distribution, this is also where this volume, the next distribution picks up. So this area is really key. This is really what I'm going to be keying off of to see if we can hold price there. If we do have some type of a rally back up, you can see we have a descending trend line. If that gets broken to the upside, then I think we may have some type of a play back up. But until it is, I'm only looking really at down levels. If we can miraculously retake all of Friday and then retake all of this Thursday reversal bar, you can see Thursday actually got itself up over this Wednesday dump bar and then really sold off in closed week. So there's a lot of emotion, in my opinion, vested in these days. And I think if we can retake this bar, this high of this was 206.19, I would say that there is very little in terms of resistance to come up and retest this all-time high, which are really poor highs. I mean, you can see there's no excess up here. And if these highs get taken in some type of a fashion, then I think we're looking at 214s, which is the 1.618 Fibonacci extension from this decline to back to up. So that to me would be the upward level in play if we can get back up over Thursday's high of day and really clear these big days. So somewhere between that 206.19 and the high of day here, which was 206.60, somewhere above there, then I'd say we're off to the races here. I think you'd catch a lot of people off guard who got themselves short, particularly pressing the lows on Friday. But the way things are shaping up, we may see a little bit lower. It seems like we're kind of close to this 50-day. So these moving averages may come into play. Let's take a look. IWM is actually not as weak, although it's not really that pretty either. it's just been in this really big chop pattern. I mean, I feel like I'm whipping a dead horse here, talking about how anything over this 117.37 has been unsustainable. It proved itself once again. We're really just testing back into the low of the range. This reference low here is important, this 114.37. It also happens to coincide with the 200-day moving average. You can see the 150 are right below, and they're also on that primary trend. You can see we had this wedge here that I had discussed, and I had discussed playing this short here. But now we're back over not only the old uptrend and back over the downtrend, but we're now kind of coming back to retest it. So this area to me is kind of really important with the 113s in particular, these mid 113s. If we do look below here are key. If price accepts below there, I would say that this is probably going to look pretty nasty, and we're going to be coming back to retest some Fibonacci levels pretty quick, probably the 111s and maybe even the 109s. If this supports, then I would think we're probably just going to go back up and retest the top of this range again. That's been the IWM trade. It's just been this choppy range. So for now, it's just a range play with a lot of moving average support right below it. If these give, then I would say we have some probably more trouble, quote unquote, on the horizon in the market. I'm going to skip to the Dow just to show you the same thing. It's doing the exact same thing. We're in this bit of getting us to be a steep rising channel. I didn't really draw the upper part of it, but you can just see a rising uptrend. We had a gap below here, rallied back up to just below the trend line, and then collapsed again, tried to rally, and then collapsed. So to me, this old reference high, this 173.32, and this old high here, which was this shoulder, this 171.32, is also going to coincide again with a 50-day moving average and a 100-day moving average. So these levels here in this zone is really, really important for the Dow to hold. NASDAQ, also very similar situation, although not looking nearly, I mean, we are looking a bit weak. We did take out this area, but we're not even back into testing that breakout. You can see we had a bit of a gap here. This level is important to me, this 101.75. So for NASDAQ to really stay healthy, you don't really want to see it take out this range. I have this the old high here at 101.56, but I personally would give a little bit more to this 100.20. So somewhere in this area, that 100.20. If you want to be ultra conservative, you could just use the top of this range here, which is this 100.56. But somewhere in this area, to me, has to be a hold. Again, 50-day moving average. Again, 100-day moving average coming up. If those give, then we're looking at Fibonacci retracements and possibly even a primary trend. Apple has been showing some signs of weakness. I'll discuss that in a little bit, as well as Google. Those are huge components of the Qs. If those two roll over, I would say we can see these distributions pretty quickly. You can see, though, these fibs coincide with with volume distributions. You can see here it coincides with this area, and then the 61.8 kind of coincides with the capping off of that area. That's a little bit of a reach, but hey, it is possible in terms of price. That will probably, by the time if we get down there, coincide with like a 200-day moving average. And then, there's this primary trend. But let's not talk about that coming into play. You can see we're still way up here. We still haven't even retested here. And I would think that area is one of importance. One cause for concern has been this TLT. I know a lot of traders like to think that low interest rates are bad for stocks. I did go to business school, and I have a finance degree. I was always taught low interest rates are good for stocks. That's usually why when the Fed is lowering interest rates, the price of stocks tend to increase. Prices, I don't want to get too much into being a professor here in terms of stock valuations, but the correct way to discount company cash flows is with a tool called weighted average cost of capital. And the debt, which is the weighted average, which is between the equity and the debt, the lower the hurdle rate, and that is just meaning the interest rate that's used to calculate the discount rate, keys mainly off of the quote unquote the risk-free rate, the Fed funds rate. As this rate, as the TLT goes higher, that rate goes lower, and that makes stocks more competitive in terms of an asset class. However, here's the big however, when you're into a non-normalized time, and we are by far in non-normalized times in terms of Federal Reserve policy, it starts getting people worried about crashes. And you can see we are above the 2009 crash high of the TLT, which was 123.15. We have seen this action before. We had a bit of a spike. This I would consider a blow off top, although this didn't wind up being as big of a price problem as many might have thought. You can see we had a bit of a rounded bottom here. We sort of made a bit of a cup and handle, and now we're coming up to retest. So what happens? What does this mean? I'm going to take you on to a longer term chart. Let's go. I have a bit of a channel drawn here. You can see the lows are drawn in, and then you can see I just redrew as a channel. Up here we tested a little bit above. But if we do take out this high, you can see the old high coincides with the channel high, and we might have to do some type of a retest back into 132s. Excuse me. I would say that is in play if we do take out these 127.68s, and I'm sure you'll get a lot of fear mongering and a lot of people getting nervous. You already have a VIX that closed a little bit high on Friday. The VIX usually tends, in my opinion, to be in a healthy range as long as it is within the boundaries of a low of 10 and a high of 20. I always say over 22 starts getting concern. Over 25 starts putting crash risk onto the table. You can see we did have a momentary spike here above 30. I don't necessarily see what would be out there for a crash right now, other than the fact that equities are really kind of overbought in the short term, although they have been seeing these corrections and rebalancings. So I think there would have to be some type of an exogenous shock. I think that these crashes in commodities may be signaling continued recession in Europe. God knows those guys are behind the 8 ball. And possibly some issues happening in China and Russia. I know that the declining oil price has been putting a lot of pressure on countries that are oil rich, particularly like Russia, and I think that there is some default risk on the table, and that's what this has really been all about, this fear. Anyhow, let's not get into the too much existential discussion about the markets, although I do like to give a little bit of a backdrop. Let's get into the Momo. That's what you guys like, right? So Apple, I have been discussing, I did a whole video on Apple. If you haven't seen it, go back and watch it. It's only a couple of minutes long. It really discussed the measured move and where Apple could go to and what I see as potentially possible. And I had said that it was kind of getting into the area where it's looking a little bit toppy, at least in the short term. I do think longer term, we could see these 128s, which is a big 1.618 fib extension from the old Apple highs to the Apple kind of crash low, and now in its the Apple renaissance. So to me, what was really important, we had this bit of we were in a channel. We broke the channel and formed a more steep channel, and then we kind of broke below that channel with this bit of a flash crash day. Kind of retried to regain it, came back down, and we've been making lower highs and lower lows since then. So Apple, to me, anything below this flash crash low day, and I had said even on the rebound, be careful. These levels, algos cache them and they like to be retested. Caching just means they memorize them. And anything below that low, which is 111.27, puts the stock as being vulnerable. We are below there. We are closed below there, particularly on Friday. So just be cautious if you're chasing Apple. I do see some support, though, that is coming into play that is very playable. So let's discuss those levels. The 50-day moving average, for one, a lot of people like to look at that. That's 108.57. We're really close. If we have a weak kind of gap down opening on Monday, it's very possible we get there, although I'm looking at the futures. They're up about 4 points or so, 4.5 points, so maybe we won't get that. We might get a gap up in Apple, but if we do get a gap down and it happens to be right on the 50-day moving average, that to me is, again, a right or right out type of a trade. Very good trade location. As you heard me discuss in last weekend's video, most of the stocks I said you would, if you were first buying now, you have bad trade location. And guess what? After the whacking it got this week, that was all proven correct. So not to be cocky, but I know a lot of you guys are loyal and faithful, and I know I probably helped save you guys a lot of money. I'm hoping so. And I know that you guys aren't really chasers. I could just see by the comments that most of you make. Some still are struggling with that, but most of you guys are pretty smart, and guys and girls. There are some ladies that follow me as well, who I think are actually quite exceptional traders. So good job for most of you. I was watching most of your tweets this week. Anyway, let's get back into some more levels of importance. The breakout, and what I had said was the long in Apple that I thought put 109s into play, which we got, and then in spades and then more, was this 103.74, and that look coincides closely with the 61.8 Fibonacci level. Apple is a stock that loves to respect technicals. You have a 100-day moving average down there. You have a 61.8. You have the prior breakout. Somewhere in between this 103.74 and this 104.57, I think, is an absolute attempt for a buy. If for a right or right out trade. If that works, that's great. We'll probably come back up and retest into the 109s, maybe even and beyond. Maybe we get a real runner if the market kind of straightens itself out. If it gets its head right, kind of cool hand Luke style, that would be phenomenal. If that, again, is wrong, it won't be a very expensive loss. And then what we'll be doing is looking to buy this old channel low. Hopefully that coincides somewhere near this gap, the gap fill from the last earnings. Apple loves to fill gaps. I would think that a close here at this is 99.76, so let's say somewhere between 99.76 and 100. I think that and the old high, keep in mind pre-crash, was 100.72. So somewhere between this gap fill of 99.76 and 100.72 to me would be a really strong buy. I think you can hold that for quite some time. I think that will hold, particularly after this. A lot of people feel like they missed the run in Apple. I think they would be very motivated buyers down there. I don't think that necessarily has to happen this week. It could play out over the next couple of weeks. Although it's a funny time of year, we do get the quote-unquote Santa rally, so we may see just a few more days of weakness and possibly some type of a rally back. But that is what I'm looking at in Apple. Again, let's recap the 50-day moving average, and then I would see somewhere in this 61.8 between there and the breakout would be the next buy. If that doesn't work, then we're looking for channel low, somewhere with gap fill and the prior all-time high. Now, what happens if we don't get down there? If Apple decides to go all ham on us and break back up? So if you get back above the this day here, this day to me would be very important, this 114.85. It was you had a bit of a rally day here. You can see a lot of people I know got back into Apple here, and then it stalled on the downtrend line, and that was sort of like the oops. And we stopped right around the flash crash low, and then after that broke. So this to me would be the important level. If we could get back above the 114.85, I know there's a lot of runway between here and there, but you know what I like to see with these momentum stocks. I like to see higher highs and higher lows. We have not been doing that. We've been making lower highs and lower lows. That to me is vulnerable and bearish possibly. So if we can retake this high and now change the pattern with maybe a higher low and then a higher high, then you start getting me interested in seeing Apple. I think Apple long. So I think if we could get back above this 114.85, I don't think it will be very much effort to get back up to retest the all-time high of the 119s, and then maybe we get get lift off the extension through it for the quote-unquote Santa rally. But let's just be cautious with that. Another one, I can't even type right. BABA. All right, so everyone is talking to me about BABA. For some reason, everyone seems to ask me every single day what my opinion about BABA is, and guess what? It's not going to change. Look at this pattern. Lower highs, lower lows. We did have a 50-day moving average test and a 50% Fibonacci test, which bounced pretty hard, but you can see there was no follow-through. The next day we retraced. We actually took out the prior day's, the prior day to this day's low and closed below there. Then we had these weak kind of hammers here. So my thinking with BABA is this. I would be a very motivated buyer if we got somewhere between the 100 and this IPO day, let's just say the 61.8 and the 100, because we could have an overshoot. So I think somewhere between 97.02 and 101.41, which was right roughly where we tested here. I had discussed playing it a bit of a long for a day trade. I didn't play it for anything for follow through, but which was smart because we got this. But this was the level I had discussed. And it also coincided with the 50-day moving average. So the IPO day high was 99.70. I think if we got somewhere between 99.70 and 100, it's probably a buy. You could probably do it either with shares or some type of a risk reversal, which just means you sell puts to buy calls. And then if there's a rally, then you could spread it off and make it some type of a call spread. My target on that would probably be back to this 110 level, because that was a bit of resistance here and it looks like it's been a little bit of a chop zone here. So for at least to 110, it's very possible that it would go back up and retest the all-time high. It seems to me that there's just a little bit of profit taking. The stock had gotten really jacked up here. It broke trend. This is really when I said you had to be really a little bit more careful with this stock. We did get a bit of a rally back to the lower high, and the rest has been, history since. So that is the range I'm looking for. Somewhere, if there is some type of an overshoot, 97 to this 101 again, and ideally, somewhere as close to 100, to this 99.70, 100 as possible, I think is good. I mentioned Baidu last week. I really wasn't meaning on covering it again this week because it was done with request, but I do see something in the chart that I would like to discuss. So the gap high that I had discussed that this stock has to stay over because I did see this channel as being of a concern, and that maybe we would come back down and retest the old channel. Maybe it takes a little bit of time and coincides with this low, which would really be amazing if it happened around here. But I am seeing it still over that level, so I think you could still be long. But here's the caveat. We're having some problems with the 50-day moving average, and we have here what looks to me like tweezer tops. If I'm not currently, but if I were short this stock, these highs would be my stop. So the stock could be vulnerable with people trying to press short, breaking it down with their stop over the high a day. So I would be just cautious if you happen to be long this. I would use the low of day here, in this 100-day moving average. You might want to use, let's say, this bar here. I like that as a stop. This 224.10 I like as a stop. And if you want to enter it for a long, for a short squeeze, I think anything over these highs probably gets that squeeze going. So 233.74 I think would trigger a squeeze, and you probably get a move back up to this downtrend line. So let's keep an eye on that for this week in Baidu. That'd be my first trade I've actually made in Baidu in quite some time. It's one I used to trade quite frequently pre-split, but not as much these days. Facebook, I've been long, I've been frustrated, I've been right. We broke the downtrend line here. Actually, we rallied back up, and then we came down a little bit more. I was wrong this day, although if you followed my levels here, you didn't get banged up too much. And we came back down, and now we're back up. So we're over the downtrend line. I think this bar probably would have closed a little bit stronger on Friday if we didn't have that kind of nasty flush at the end. So I'm going to be a broken record again. I was accused of that on the stream. I'll say it again. As long as the levels work, they work. Anything over 76.88 I think is a long in the stock. Anything below there is a little bit suspect, and I think you have to use this sort of. I could redraw this now because of this. Let's actually do that because we have a higher high. So let me redraw. I think you can use this uptrend line here now as a stop if it gets below there. I often like to play with closes, so I sometimes give a stock a little bit more room than it should. It often works. It sometimes doesn't work in my favor, but if you're really a careful Mike and you have bad trade location, like if you bought up here on Friday and you're a little bit nervous, just use your 76.88. You'll be okay. If you have good trade location and you happen to block out and buy down here, you can see we have a 50-day, 100-day, and 100-day moving average coinciding with this trend line. So I might be inclined for myself to give it a little bit room down into this area, just because this was really the breakout bar. You can see over this bar to me was the breakout, which was 75.66. So if your size is right and your trade location is right, you can give it a little bit more room. If it's not, and you're being careful, those are your within a buck. That's really your risk range. If this breaks, I think we fill up the kind of this bit of a I couldn't even say really fill up the triangle, because we might if we come down to the 72s, but we might really retest this more primary trend down here, which would coincide with this area, and we'd back into that chop range, which is really not anywhere I'd want to be. So this area to me is going to be the firm stop. Let's discuss Twitter. I had been discussing real patience with this stock and waiting. I said that I thought the range was going to be in the 42s, 43s, with the lower end in 35s. We had a slight violation of that. We got down to 34.66. So I took a couple of cents of pain there. I wasn't happy, and but it did work out. My 35 level basically did hold. I'm still long in the stock. I did take some profits at the close of day this day, just because I often do enter trades as day trades and also then play them for swings, so I am technically long. Any violation of this bar here, you got to be out, because then I think you could have 29 half in play. But as of now, I think the trade is long as the stock is over $35. If you're a little bit late, you don't really want to see the trade anywhere below the low of day too much on Friday, which was 36.10. So I still think as long as the stock is kind of like in this 35-36 area, it's still a long for a trade, a retest up here of close to 40, probably into the 39s, and maybe beyond. Maybe we do catch a runner and it comes back up into the 42s, which would be nice. So that's my analysis on Twitter. One I've been watching. I think this one also had been holding up really well on Friday, but then got slammed in that last, dump. Is Gilead. I think that the stock, as long as it's over 103.90, what is this, 97? Yeah, 103.97 is okay. We kind of closed by the skin of your you-know-whats right over it. That was this bar to me. So anything over there, I think you can play it long. I did not love the close. We had, some topping looking action the last couple of days. If you want to re-enter the trade now, the way I would play it personally is, if you're late to the party, look for a buy somewhere off the trend, because it's a right or right out play there. Or if you're looking to buy it, I think anything over this breakdown area, this 105.75, I think the stock is fairly strong. That, to me, you could see there were a lot of topping tails here. There was a lot of responsive sellers for people who had kind of tried to buy the dip here wrong. It's also a high volume node. You can see this 106.34. Anytime we've gotten up into there, it's been a bit of a problem. It's had multiple tests there now. I think if we can get back up over these bars, back up over the 106s, you probably see the stock retest into the 110s and maybe beyond. But it's been choppy. It's been a really choppy market with a kind of a cruddy tape. So really I would be looking really to see these highs get taken out to know that this overhead supply is out of the picture. One that has been an absolute pig is Google. You can see it's snapped a trend line here. It's coming back to retest these lows. My opinion about Google is you can't own it right here unless you see it break the downtrend line. I think you could probably do a little bit of roar action down here at the 511, but we've been down here so many times. The more times you bang on support, the less support it becomes. If you look at Google on a bit of a longer term pattern, I don't know if I want to do the weekly. Let's do a 3-year daily. Yeah. If we do snap this here, you can see we might want to come and test into the gap. I think that if Google fills this gap, it's probably a good buy, but just because it'll probably have come down a lot. You will have a lot of overhead supply. I think that the gap play would be kind of like back up to this breakdown of the 511 if it did get back down there. Hopefully it takes a little bit of time to get there. I would love for it to coincide with this primary trend line. So if it kind of came down, overshot a little bit, maybe you'd buy it somewhere in these lows. So I think somewhere in this range, just depending. It's not going to happen this week, I don't think. So I will revisit this in future videos. But since I'm doing the video now, I think somewhere around this gap fill, maybe on a little bit of a reshoot. So somewhere in this range between this 421 and this 440, somewhere in that 20 points, I think here will be a buy for a pretty decent swing. So let's be on the lookout for that. First we have to deal with these lows. If Google pulls some kind of a move that nobody is expecting, I know that they're under a lot of pressure because the EU is talking about breaking up Google, monopoly problems. Sounds very Microsoft-y, which had put Microsoft kind of into the doldrums for quite some time. But if Google could break this downtrend line, I think that there might be some room up to maybe these breakdown points. So if you get some type of a negation of this bar and this like these bars in here, maybe it comes back up to test into this 548 area, maybe 550, which would coincide with the 50-day moving average. So that's sort of what I'm looking at here in Google. Priceline. Actually, let's do MBLY. I covered that one last week. I had said that I didn't see much in this chart as long as it was in this range, and you can see we fell out of that range, and it's now testing. It's testing quite weak. This stock to me has to stay over this 39.40 area, or it's going to be into some real trouble. And it might even be into some real trouble if it loses this area. If it does wind up coming back up into this range, I still think I think anything in this range, really, honestly, is just chop and a no touch. If you want to play it short, anything below 43.63 is okay. You might have not such amazing trade location. I'd wait for some type of a bounce if you're first entering that trade. But for me to be long, I'd really want to see it get over this earnings day high a day, which is 49.49. So I have a feeling that this stock might not be really playable in Justin land for quite some time. Priceline, another one of these kind of Google pig type of action this year. Again, I just think these stocks ran a lot last year, and they've been just dealing with a lot of consolidation. When stocks are up enormous, they need to pull back. They just need to consolidate. This 1087.26 is going to be key again, it looks like. I think that the stock, as long as it's here, it looked like it had been trying to rally. You had a low, a higher high, a higher low. It was trying up here, but didn't make the higher high, made a lower high, and then coming back down, it snapped that trend. I think that this here can be, if we retest this low successfully, I've seen Priceline do this before. If we can retest this 10.17.28 and it holds successfully, it could be some type of a right or right out trade for a move back higher. So that's really what I'm looking. I'm going to set some alerts down here, and that's where I would be a bit of a buyer. You could also, if you want to try like a little bit of a test, this area here was support the last time. Maybe it holds again. For me, though, the way I trade my style, I'd be looking for something down here. Either that or some type of a break of the downtrend line, and I wouldn't be using this this more steep one. I'd be using this one because this one had this big emotion. You had this big gap, this big topping tail with this huge gap down on earnings. So if you could break that type of this to me would be the more solid trend line. If you could break that yellow trend, then I think you could start thinking about Priceline back up to the upside and maybe coming up into the more dominant trend line, downtrend line up here in the 1200s. But for me, that's that's probably not something we're going to have to deal with too much this week. Taser. I had discussed that this was bad trade location and that there was probably not that much to do if you were going to try and chase this thing long. That was up here. You can see we did come back down. We did retest the breakout point, basically. It stopped a little short, rallied back up a little. It looks kind of like it's a little bit vulnerable to roll over. I know this was very... it is still in an uptrend line. I mean, you could still own it if you're long based on this this trend line, but I would be a little bit cautious. It did hold here again. I'd be definitely cautious if it's coming to it from a lower high though. So, you know, you've had a lot of news with the police with buying cameras with the Michael Brown shooting, and also that Eric Garner and the protests are still raging. I do think that happens, but I definitely would be more of a buyer of Taser. I think it's a good buy the dip stock. I would just like to buy it lower. I'd like to see some of this froth work off, and then see, you know, maybe the stochastics come back down some more before getting involved. I'm going to end it with Tesla. Unfortunately, this stock has been really not really. I don't really think that tradable. Other than to the short side, which I had discussed. If you fell out of this channel, play it short. This was, again, with some Morgan Stanley action. The stock has come down. It took this low from a lower high. Now we have a lower low. I had been discussing it coming down here back when it bottomed a little bit ahead of where I would have liked it. I would have liked it to have tested these levels. This, to me, is a must-hold area. This is a measured move low from a big prior decline. It's also this would complete the Head and Shoulders top. So you can see this area, this 203.64 to 206.84 is a must hold. It held very well here, but we are now retesting it. So to me, this is the key day, this high and low. Anything below 204.27 is weak. You could probably try and play it short. If it gets back above the 217.73, then I think you can play it long. That's how I am looking at the stock. If we do get back up above there, maybe we get, you know, a retest of this downtrend line. I think that the weakness though in crude has been pressuring solar, electric cars. So you can see this breakdown. This rally back up came basically just back to where the breakdown was. And that, to me, is why if we can get back up over there, I think that there would be some more price acceptance back up, maybe to retest the 200-day MA, possibly the 50 and the 20. If there's some type of a squeeze, maybe the primary downtrend line. So that's what I'm keeping my eye on for this week. Anyhow, thank you guys for watching my videos. I appreciate it. If you liked it, please hit the like button, and be sure to follow me on Twitter. My handle is @JustinPulitzer. Let's have a great week. Cheers.